The World Bank's upper middle class status for Sri Lanka has brought an uncomfortable reality of India to fore. It has created a puzzle that how Sri Lanka became richer than India, which is one of the world's largest economies. The World Bank, in its latest income classification update released on July 1st, 2026, classified Sri Lanka as upper middle class. India has remained in the lower middle income category for nearly 2 decades. However, the small neighboring country bounced back to the upper middle income club with the real GDP growth by 5% after one of the worst economic crises in the history it faced. The World Bank described Sri Lanka's achievement as a story of recovery and said, just 3 years after a severe economic crisis brought the country to the brink of collapse in 2022, real GDP grew by 5% in 2025, driven by a rebound across industries and growth in financial and tourism services. The reclassification is a marker of resilience, though the country only narrowly crossed the threshold, it added. Along with Sri Lanka, Vietnam, and Philippines have been upgraded to the upper middle income group. This comes as a major boost for Sri Lanka, which underwent a harsh economic crisis just a few years ago. India, however, continues to be classified as a lower middle income economy since 2007. It has raised eyebrows of Indians as Sri Lanka was battling a sovereign default just 3 years ago, while India is known as one of the fastest growing major economies in the world. Why India's rapid economic growth has not yet been accorded the status by World Bank? The answer is very simple. The World Bank's classification is not based on the size of an economy. The classifications are based on gross national income per capita estimates from the previous calendar year. That is why India's rapid economic expansion has not yet translated into a higher income classification. The average income per person must rise above the World Bank's upper middle income threshold before the country's classification changes. This year's edition covered 218 countries, and the results will serve as a global reference until the end of June 2027. The World Bank has 4 country income classifications: high, upper middle, lower middle, and low. How did Sri Lanka move into a higher income group? There is no single route to a higher income classification as per the latest World Bank update. Sri Lanka's return to the upper middle income category reflects its recovery from the economic crisis that culminated in a sovereign default in 2022 and the suspension of payments on its external debt, amounting to approximately $51 billion in foreign obligations. The World Bank said the country's economy expanded by 5% in 2025, supported by a broad rebound across industries and stronger tourism and financial services. It described the upgrade as a story of recovery, while noting that Sri Lanka crossed the threshold only narrowly. Why has India remained a lower middle income economy since 2007? The World Bank uses gross national income, GNI per capita, not gross domestic product, GDP, to classify economies. GNI measures the total income earned by a country's residents and businesses wherever it is generated and divides it by the population to calculate the average income per person. It uses the Atlas method, which smooths the impact of short-term exchange rate fluctuations, while the income thresholds are revised annually to account for inflation. For the current classification, economies with a GNI per capita of $1,136 to $4,495 are categorized as lower middle income. Those with a GNI per capita of $4,496 to $13,935 qualify as upper middle income. India's GNI per capita is roughly $2,500 to $2,700, placing it firmly in the lower middle income category despite its rapid economic growth and expanding global economic influence.